Well, the materials sector has been outperforming the broader market so far this quarter, and that falls right in line with what history would suggest. But is the group rising this year for different reasons than in the past, and how does that set up the sector for 2016? Dominic Chu here with a look.
Over the past 10 years, material stocks have been the big focus for investors during the final quarter of the year. So you think everything from industrial gases like oxygen and nitrogen to chemicals to aluminum to gold. And according to data analytics firm Kensho, the fourth quarter has produced average material sector returns of nearly 3%, and it's been a positive trade for the sector 7 of the last 10 times. Now, that story is also playing out again this year to a much larger degree. Since September 30th, the group has already gained around 14%. However, much of that gain comes on the heels of a sharp decline in those stocks in the months leading up to this final quarter of 2015. Some experts think the sector is due for a little bit of a breather at this point.
I think the difficulty for the materials sector comes into play when you start really assessing where we are on an economic basis. We have a rising dollar, so that's going to constrain part of the overall economy. Now, as the overall economy is constrained, it's going to have an impact on these material companies.
Now, economic growth is key for these types of companies because they make more money when their products get used more during business expansion. So a big part of the future story with materials companies lies in how strong the global economy can really be. Now, the more bullish camp feels as though these stocks will continue to participate in the context of a stock market that's headed higher, broadly speaking.
I think stock markets can continue to grow on the upside. And I think my 3 main reasons of why is that you have a reasonable PE ratios, you have reasonable price to sales ratios, and you have no euphoria in the marketplace on either the greed side or the fear side. So the market will continue and probably most likely surpass 20,000 on the Dow Jones in the next 18 to 24 months.
So it all comes down to how the economy performs, not just here in America, but globally as well. Material stocks have already been underperformers this year to date, but they're finding some year-end cheer at this point. The question is, will it stay that way into 2016? For Nightly Business Report, I'm Dominic Chu.